Let's keep it simple. No hype. You can't just enter a trade anywhere on the chart. There's always a specific moment, a precise entry point. Every trade should be based on either a bounce or a breakout, but how do you know which one is happening? It all comes down to candles and how they react to levels and trend lines. So it's pretty simple. As I said, there are two scenarios: rejection from a level or a breakthrough. Your job is to recognize when price is ready to move and confirm it through candles. That's where all the real data is. Start with support and resistance zones. This is where we look for price reactions. Let's break down how to find them. A support level is where price stops falling and bounces upward. A resistance level is where price stops rising and pulls back down. To draw them, find areas where price repeatedly reversed or stalled. Use the horizontal line tool and mark the spots where price touched the same area multiple times. You can use either the candle wicks or bodies as reference points, but it's best to focus on zones where price has tested the level multiple times. Now pay close attention to candle behavior. If price touches a level but doesn't break it, that's your first signal. It often taps the level with a wick and bounces back. Here are a few examples of candle patterns that confirm a potential bounce from a level. If you see a candle with a small body and a long lower wick, that's a hammer. It means the market tried to break the level but failed. The wick itself shows the reaction. Price pushed through the level, but by the end of the candle's life, it got rejected and pushed back up. That's a bullish reversal signal. Or the opposite. A candle with a long upper wick and small body is a shooting star. That's a signal for a reversal down. Another example, an engulfing pattern. When a large candle moves in one direction and completely covers the previous one. This is also a strong reversal signal, a clear battle between buyers and sellers, played out across two candles. Important note, you'll see these candles everywhere on the chart, but they only matter when they happen at a level. And they only work when followed by a strong impulse candle in the direction of the bounce. I want to start making money online, but I don't know where to start. What if I lose my money? I hear this all the time. Look, trading isn't some magic button to get rich overnight. But if you want to try it the right way, without wasting money or months figuring things out, here's how. I trade on Quotex, and right now, you can copy my trades for free while learning in real time. No upfront fees. I'll get a commission from the platform instead. That means you can test everything on a demo, see how it works, and decide for yourself without spending $1. It takes minutes. You get the currency pair announcement. Open it on the platform. Then you get the signal. Place the trade. And that's it. Will this make you a millionaire tomorrow? Of course no. But it will get you started, you'll see how it works, and see your first profit without risk. This is the easiest way to step into trading. Just check it out and see if it's for you. Click the link, get set up, and let's go. If you've mastered this part, you can add indicators for extra confirmation. For example, RSI. If it's above 70, market is overbought. Below 30, oversold. Adds weight to a reversal. One more option is MACD. If lines cross and the price is near a key level, it gives even more confirmation. Pro tip: don't go against the bigger trend just because of one reversal candle. This bounce strategy works best in flat markets, when price moves between two levels without a clear trend. Let's flip the situation. Now we're watching for a breakout. Here, price approaches a level and doesn't reject. Instead, it starts pressuring the level. Candles get tighter, wicks get smaller. This shows the level is weakening, especially if after a series of small candles, a large one breaks through the level and closes above or below it, depending on the direction. This kind of breakout is often confirmed by a spike in volatility. Candles get longer and momentum kicks in. Want confirmation? Use indicators. For example, ADX. If it's above 25 and rising, the trend is gaining strength. Vortex shows what dominates in the market. Red line above yellow means that bulls are in control. Yellow above red, bears. When these indicators match what you see on the chart, that's your entry. Pro tip: Before a breakout, price often squeezes between a level and a trend line. That creates patterns like triangles or flags. They work when the price breaks out in the direction of the trend. Still not sure how it all fits together? Let me show you some live examples. Trade number 1. I draw a trend line across the recent lows and see a downtrend, so I'll be looking for short setups. I mark my levels and see that price breaks the trend line but starts moving sideways, bouncing between levels. This is a back to trend scenario. Price pauses, then returns to the original direction. Now I focus on the support level. Price only touches it with wicks, not real candles. That shows the level is holding. Then comes a doji candle, long wicks on both sides. The market is indecisive, so I wait for the confirmation. Right after, a big red candle breaks down. That's my entry, 14 minutes down. Why 14? Because I measured the length of the previous impulse. And I know price will need roughly the same amount of time to cover a similar distance again. I check the vortex, yellow line crosses red from above. It means that bearish momentum is building. Trade closes in profit. Trade number 2. This time, the opposite case. I draw a trend line and spot an uptrend. Next, I mark a support level and see that it's been tested multiple times. Now price is stalling near that level, not bouncing, it's hovering, preparing for a move. Important detail, this level is strong and has been tested twice earlier in the day. Price pulled back both times. Now I wait for the breakout. After a few small candles, here it is, a strong green candle breaks support. I enter a call for 18 minutes. Why 18? Because I'm using the 2-minute chart and I want to give price time to build momentum. To confirm, I turn on the momentum indicator. The line crosses above 100. That's exactly what I needed. Another trade in profit. If you liked this video, drop a like and hit subscribe. Every breakdown I share is based on real trades, with clear logic and structure. And if you want to follow my setups in real time, check out my Telegram. Link is in the description. See you in the next one.